and welcome to Product Spotlight. I'm IFA editor Sarah Kendall. Advisor take-up of managed accounts has been consistently rising in recent months off the back of increasing regulatory costs for advisors and an increasing desire for flexibility as advisors grapple with COVID-related market volatility. Today, I'm joined by Head of Managed Accounts for Macquarie's Banking and Financial Services Group, Eylem Kamerakkas, to discuss more about how and why advisors are choosing to use managed accounts and what innovations Macquarie has been working on in this area. Eylem, thanks for joining me.
Thanks for having me, Sarah.
Now, managed accounts have been around for a long time, but what is behind the increased interest, in your opinion, especially in recent times with the COVID pandemic?
The pandemic really accelerated the trend we were seeing pre-COVID, and that trend was really spurred by accessibility, but also particularly from a greater awareness perspective. So advisors were and are still, perhaps to a greater degree with COVID as well, seeing the significant client benefits that managed accounts can deliver, but also the significant practice benefits. So really being able to elevate that service proposition and ensure that they're available for their clients when they need them most. From a client perspective, what managed accounts has really done is it's demonstrated for clients and illustrated for them firsthand the significant transparency, beneficial ownership, cost effectiveness, and the agility that the products and the solutions offer. So really being able to help them work closer with their advisors and also to be able to execute faster on their needs and objectives. And I suppose the other thing that's also spurred the interest and ever so more post-COVID is the accessibility. So we know today that managed accounts are far more accessible on many platforms. Previously, it was only 10 platforms that had a managed account capability. That's now at 16. And we also see that advisors are taking up managed accounts to a higher degree than any asset class. So 75% of advisors are using managed accounts, and the attrition rate comparatively is only 7%. And we've also seen significant investment in that space, and that's been spurred again from the demand and increasing benefit that managed accounts are really delivering. And the thing that I will finish off is that from a COVID perspective, what it's really brought to the fore is that benefit of expertise, and it's also prompted what I think is a real flight for all quality.
And when you talk about managed accounts having the ability to bring advisors and clients closer together, how do you see the role of the advisor evolving going forward?
Yeah, look, Sarah, we've known for a long time that the role of the advisor has been changing. And I suppose the pace of change in recent times has really accelerated this. So change we know requires innovation. It requires stopping old behaviours, unlearning traditional solutions and seeing problems from a different perspective. So what managed accounts really do is it enables advisors to be able to do that in a really effective and efficient manner. We know, for instance, that advisors who are using managed accounts are seeing a time saving of 13 hours a week. That's, to put it into perspective, that's a day and a half a week. So that time saving, they can really invest back into understanding their clients, understanding their objectives, and also being available to help them navigate that uncertainty. We know for a fact that with COVID, for instance, clients' needs, objectives, their risk appetites have changed in some instances gradually, in some instances overnight. So being able to really be responsive to the needs and the changing circumstances of your clients is something that is going to put any advisor at the forefront of their service proposition. Advisors have also come to appreciate the fact that managed accounts does not take them away from their craft. It does the exact opposite. It elevates the service proposition. It enables them to provide a really personalised and differentiated service in a really consistent, compliant and cost-effective manner. So managed accounts really are there to support advisors, be able to essentially anticipate the needs of their client and also start from a psychological basis. So rather than being the decision makers, they work with their clients to become the decision shapers. And thereby they see clients who are far more engaged, far more confident and far more conscious of the decisions that they're making with their advisor. So therefore they're more invested in those decisions as well.
And what role can managed accounts play in all those changes that we're seeing for an advisor?
Managed accounts have essentially evolved into a client engagement tool and a really powerful client engagement tool. So a truly aligned managed account solution that resonates with a practice can deliver three key benefits. The first is it can elevate that advice relationship. I've touched on that a couple of times. Secondly, it can democratise the advice. And thirdly, it helps advisors achieve and meet their best interest duties. So if I move to the first one, which is elevating that relationship, what Managed Accounts does is it delivers that significant client benefit, but it also gives advisors the flexibility and also the broader access that they perhaps may not have otherwise had to professional managers, to partners, to products and services and propositions that previously were only available to a finite amount of their clients, and it ensures that they're able to bring that to a broader range of their clients, and ultimately work in a way that is going to help them, again, not just meet those expectations, but essentially anticipate those expectations and needs of their clients. So really positioning themselves as a trusted advisor. Secondly, Managed Accounts democratises the advice. And what I mean by that is solutions, options, features that were previously available to institutional clients or to high net worth clients today are available to a broader range of clients of all different types of balances. So Managed Accounts really has a propensity to deliver on democratising and essentially equalising the access to advice, and equalising it in a way where it's going to be efficient but also cost effective as well. So at Macquarie, the concept of client centricity, choice, flexibility is the very fabric of our Managed Account solution, and that's why we allow advisors and their clients to be able to choose 3 different options, be it buy off the shelf where they can purchase into a pre-built model. They can build a model themselves, leveraging their own internal capability, or thirdly, they can partner with an expert where they are outsourcing their investment capability entirely to a third-party expert. And what that does is that enables us to essentially ensure that we're positioning our service and our solution in a way that's going to support advisors and ensure that they can meet their objectives. And thirdly, I talked about best interest duties, and I think it's important to understand that best interest is not a one-dimensional consideration. It's multi-dimensional, and for us, this is what we take at the very core of our solution.
Now, we know that Macquarie has been a pioneer in the space, having launched its Managed Account solution over 2 decades ago. So what are some insights that you could share from that long history with an advisor or practice looking to explore a Managed Account solution?
Thanks, Derek. Look, we're really proud of our history, and as you say, we've been in the space for over 2 decades. So our experience has really helped us deliver Managed Account solutions and transition plans for many clients, both boutiques all the way through to institutional clients. And I suppose one of the real benefits and privileges we have as Macquarie is when we see our clients, our advisors reaping the benefits of a Managed Account solution that they themselves have had a part in, they've built. And the ultimate in terms of that reward is when the solution is deemed to be BAU, like it's existed from day one. So I suppose leveraging our vast experience, the 3 things I would share for any firm looking at a Managed Account solution is essentially, first thing is being very clear in terms of vision and purpose. Secondly, it's ensuring you have the right licensing authorisations. And thirdly, it's ensuring that you are engendering a culture and a sense of ownership. So the first thing, in terms of clarity of vision, what I mean there is just being really clear in terms of your value proposition, from both a client value proposition perspective, but also from a business perspective. Be very clear and also deliberate around what you will retain, what you will outsource, and which of your partners and service providers will be on that journey with you to essentially help you achieve your aspirations as you do for your clients. The second thing I will say is being aware of the licensing considerations. So what I mean there is ensure that you have the right client, right product and right service authorization for your preferred Managed Account structure. But more importantly, ensure that your Managed Account solution and your structure is one that is going to be sustainable. And finally, it's engendering that culture of ownership. So we all know that any sort of change requires significant change management. So a Managed Account solution, especially a new one, will require a big cultural and operational shift. So it's important to ensure that that sense of ownership is engendered very early on. So your partners, your staff and your clients are there with you on that journey, and they're helping you essentially execute on that vision.
And looking forward towards the future, what's next for managed accounts? Do you think it will return to the pre-COVID levels, or are we going to see continuing acceleration in the take-up?
I think we're definitely going to see accelerated take-up, Sarah. And I say that especially when we look at comparative experiences. So, for instance, in Australia, we've got fund levels from an industry perspective that are just shy of $72 billion. Comparatively, in the US, the managed accounts industry is USD $6.8 trillion. And in the next 2 years, it's only set to increase to over $10 trillion. So that tells us there's still a long way to go, and especially having regard to the fact that the Australian managed accounts industry is in relative infancy in comparison. There's also the increased awareness and accessibility that I referred to. So what we're going to continue to see there is continued investments by platforms and product providers alike. And I say that particularly because I know that managed accounts today, for instance, are taking a quarter of all platform flows. That's going to be increasing to over 50% in the next 2 years. And I think, frankly, it won't even take 2 years. It'll be far less than that, because that's definitely the trend we're seeing from a platform perspective. But I suppose over the next 2 years, we're going to see a really exciting pace of growth. And that's perhaps going to be spurred by essentially three things. The first is simplification and streamlining of structures. The second is data and tech taking centre stage. And finally, we'll see that greater choice. So when I talk about the first point, which is simplification and consolidation of structures, what I'm saying there is essentially this, we're going to see a standardisation of structures. So that flight to quality that I referred to, there's going to be a preference towards simpler structures, less complexity, and also those structures where there is that transparency and there is that ownership benefit that many clients and advisors are looking for. So we'll perhaps see more of a trend towards managed accounts that look like separately managed account structures. And we know that for a fact because at the moment, 80% of all managed account structures that are being used are SMAs over some of the other structures, but particularly with MDAs. What we'll also see is, that consolidation essentially translate in a way where providers will also look to embrace and take on that trustee role that many providers from a registered scheme perspective currently have today. And secondly, we'll also see that data and tech taking centre stage. And what I mean by that is that there is significant data that is yet to be leveraged. So if we think about, for instance, every day we're producing about 2.5 quadrillion bytes of data, and 90% of that data has only been produced and created rather in the last 2 years. So that statistic is only made profound when we think about the entire managed account value chain and ask ourselves how much really of that data is an investment manager, is an advisor, is a platform, is a product manufacturer really leveraging to provide their advisor with that next level of interaction and engagement with their client. So the future really presents a massive opportunity to tap into this data, and it's really harnessing the power of cognitive analytics which combines advanced AI and also machine learning techniques to apply that human-like intelligence that's been missing for many years. And with that technology, ultimately, it will amplify the automation and also efficiency benefits that managed accounts deliver today. So really taking it to the next level and providing what I call essentially that hyper-personalization of services and products for clients. And finally, greater choice. So I talked about choice being an important feature for many clients and also advisors, and particularly so the benefit of choice has been highlighted with COVID, where the accessibility to different types of investment capability and products and features has only been highlighted with all the increased volatility, but also the opportunity that's been presented with COVID. So what I mean there is that managed account providers, platforms will continue to invest in product capability, will continue to invest in technology, and essentially that will translate into delivering those efficiency and automation benefits back to advisors and ultimately clients. And secondly, we'll also see new entrants coming into the market. And by new entrants, I mean traditional fund managers that were previously only available to a handful of clients or a handful of advisors, really coming into the managed account segment and appreciating that managed accounts can be a complementary offering to their existing product suite rather than a competing product offering. So helping them leverage that deep expertise, that resourcing, as well as a track record to provide essentially a far more personalised service to end clients. We're also going to see a broader suite of options within models themselves. So we at Macquarie today are proud of the fact that our solutions, our features are driven by clients and it's driven for clients. So ultimately, we lean into and we're passionate about ensuring that we're delivering solutions that are responding to the needs of clients and applying that real human-centered design approach to our solutions. So we're really focused on ensuring that we're delivering services and solutions from a managed accounts perspective that are going to bring advisors and clients closer together and essentially remove that friction and remove that complexity that has already existed in a very in an ever-changing complex environment. So for us, simplicity, client centricity and flexibility has always been and continues to be the very fabric of our managed accounts solution and our offering.
Great. Well, it'll be really interesting to see what happens in the space and what Macquarie has for us next in the managed account world. So thank you very much for joining us today.
Thank you, Sarah.